Exam topics. Your gate.
Delay the decline in the inflation. There was already an expectation that some...
If we look at the high oil price and we look at other things like food, etc., which is really playing out in Asia in particular, as of course these things are largely also priced in dollars, and we've got also rice, which is one of the key key to the diets in this part of the world. Does this mean that perhaps the inflationary beast has not been actually killed as they had thought so perhaps a couple of months ago as far as this continent goes?
So as far as Asia is concerned, different base effects will be at play. So the headline numbers are not necessarily going to be coming off in the same way. But looking at the month-on-month gains, already we are seeing some increase in the month-on-month of transport inflation. And then if you add the heavy weight of food in the CPI basket of Asia, then that's likely going to push up inflation further. So we are going to see, I would expect more central banks in the region to start saying that they will start the hikes again.
Well, and one which is not saying that, Eugenia, is the Bank of Japan. They're saying they're going to wait till they get all the wage negotiations out the way before they decide anything about tightening monetary policy away from what they have at the moment, which is ultra loose, as it were.
Well, as much as they want to maintain the ultra-loose policy, we're seeing some cracks in their own inflation narrative. Even the BOJ has already acknowledged that there are upside risks to the inflationary expectations in the market. So in my view, it's only a matter of time before the BOJ can actually do their exit. Whether Governor Ueda would be successful in managing the quiet exit that he wants remains to be seen, but an exit, in my view, is inevitable. What is interesting, though, is that if the Fed were to really keep the rates higher for longer, then that would provide a longer runway for the BOJ to tighten policy.
Okay, that's the way that they're looking at inflation. What about other countries, particularly in Southeast Asia? We've got, for instance, the Bank of Thailand out with a rate decision this week. You know, how do they look at it? Because we're looking at 25 basis points when the official data really shows that inflation is running at very, very benign levels. There isn't any virtually.
Yes, as I said, so the base effects are going to be acting differently across the region. So the base effects on a year-on-year basis is going to be very good for Thailand, but the month-on-month numbers are going to be quite problematic. Also, if you combine the food and the energy items in Thailand's CPI basket, that's almost 70% of the basket. So the risks to the inflationary outlook can only be to the upside.
Eugenia, thank you so much for joining us, Eugenia Victorino, Head of Asia Strategy at SEB. Now coming up, we're looking at JP Morgan. They're going to be sharing India's M&A outlook. Their investor summit is getting underway in Mumbai. Their global head of M&A, Anu Iyengar, joins us later this hour. Plus, look at this company. We've got Evergrande under fresh pressure. This, as the embattled developer, again scrubs creditor meetings and warns of a do-over of its debt restructuring plans here as well. We've got details on that on the way and much, much more. This is Moonbin.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
To the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point,
What is the lesson? Slice through the noise.
forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point,
What is the lesson or the observation?
There we go. As ever, we are looking at China property, and look at this. We have a dive taking place for these companies. Sediment taking a hit because of Evergrande this time. The distressed developer scrapping its key creditor meetings. Did so at the last minute and said that it must revisit its restructuring plans elsewhere. I mean, look at China Oyan Group here as well. The company there returning to the market, it's slumping by this record 72%. This is after it's been suspended for quite a while. All of this, of course, adding to the mounting worries about the property side of things for the economy, with the investors questioning the effect of policy support. There's a liquidity crunch for these developers too has shown little signs of abating. And indeed, let's have a look at Evergrande in a bit more detail, because China Credit editor Kevin Kingsbury's with us now. What do they actually say? And Kevin, what were the nuances behind that, I suppose?
Right. Well, first, Rish, on Friday, they announced that they weren't going to go forward with this week's creditor votes. They said that there was some trouble with sales the past 6 months, which obviously we've talked about regarding a number of developers.
Really?
Yes. A number of developers whose sales have been slumping. I mean, for Evergrande, Country Garden, for example, down 72% year over year. In August, we've been talking about them regarding their struggles lately. So they said that, and along with some considerations from the creditor side, that they need to go back and kind of reassess the plan, which is no surprise considering since trading for all three of the Evergrande companies resumed back in July and August, they're all down roughly 2/3, and obviously with today's news, they're down another 12 to 20%.
So it's going to be, what are then the wider implications, and just for both for Evergrande and others, I suppose, here as well, because I mean, these has implications beyond the shores of China, certainly.
Sure. I mean, certainly we're seeing that with the stocks today across the sector. It also raises the question as to how are these debt restructurings going to proceed for offshore creditors? I mean, they were kind of been stuck with this, watching Evergrande and some of the other smaller developers kind of go through the restructuring process. It's 21 months now for Evergrande, for example, since it first defaulted. And now what was one of China's most complex restructurings, it looks like they have to kind of blow it up and kind of restart this whole process again. And so the offshore creditors have to wonder, well, how much longer is it going to take me to potentially get any recovery whatsoever?
So what are you watching for? What needs to be done here? What are you watching for in the coming days, for the industry as a whole? And also give me a sense of whether there's been any more prodding from the administration to get banks to lend to these guys, because I guess they look at it from a commercial imperative and go,
Right. It doesn't seem as though there's been anything fresh from the government on the lending side. I mean, certainly they've been trying to get people to buy homes. We have the mortgage restrictions easing earlier in the month. We saw some pop up in demand then, but I think the numbers we see at the end of the week from CIRC in particular for September sales, that'll really be key as to how the temperature is regarding the sector, and especially going into this key Golden Week period, which historically has been a really important period for home builders.
Kevin, very quickly, I mean, when you look at it in its entirety, and then you look at the government response, which has not been the big bazooka that everybody's expecting, are they managing it in a certain way? What do you think their end goals are with the way that they have been approaching this property crisis?
I think just the whole time they've been looking to get the homes that have been purchased completed. That's really all they're worried about. Whether companies stay in business or not, I think they really don't care. Or certainly as far as the private sector companies go. They really want the homes built. We saw the mortgage boycotts a year ago where some people who were concerned about whether they would get delivery stopped paying on the mortgages, because in China, a number of new homes, the mortgages begin actually before people start to move in.
You start paying a mortgage before it's even been built.
Yes. And so that they're trying to avoid that, certainly. They want to keep the social calm throughout the country, and they don't want property to potentially be a fire for that.
Kevin, thank you very much indeed. Kevin Kingsbury there, taking a look at Evergrande and indeed them abandoning their plans for a restructuring for the time being, at least. Kevin Kingsbury, of course. A lot more to come, including a full market check, equities under pressure, bonds again, also likewise. Checking those in more detail. This has Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
There's this new way to get AI in just about any app that you use. You can combine AI with over 5,000 apps to automate work with apps that you're already using every day, like Gmail, Facebook Messenger, Google Sheets, Airtable, Slack, and thousands more. For example, we can bring chat...
You are back with Bloomberg Markets as we have a look at what's been going on in Hollywood, where screenwriters have reached a tentative new labor agreement with studios, including the likes of Disney and Netflix. It's been seen as a step toward ending a strike that's lasted almost 5 months. Details coming from our global business editor, Karen Lee. Karen, give us the nuts and bolts, first of all, of what we know.
Well, this is huge news for Hollywood, and it's news that both the industry and the city have been waiting for since this strike began in May. Now, there is a little bit of a catch. This isn't official yet. It still needs to be ratified by the Guild. But the Writers Guild of America calling this an agreement that will have gains and protections for its more than 11,000 members. It's a tentative 3-year agreement. And, you know, it's hard to really over-exaggerate the effect that this strike has had on the city of LA and on the industry. The industry hasn't been able to put TV shows and movies out the way it normally would. And the city has really taken billions of dollars in economic hit from all of this. So this is the news they've been waiting for. At the same time, it's important to note that the Actors Union, SAG-AFTRA, is still on strike. And until that's done, Hollywood won't be back to where it was. But they're hoping to wrap this up before awards season kicks off. It's coming up in a couple of months. So they're really hoping that this is going to be momentum that will carry them into getting this all taken care of.
Yeah, and Karen, I mean, as you say, the actors are still on strike. What's their beef with what's going on now?
You know, the rise of streaming services like Netflix has really changed the way that Hollywood runs. It's changed the way that people have been paid. And at the same time, they're concerned not just about money and residuals, which have been totally different with streaming services than they were with traditional television and film. At the same time, you have the rise of AI, and they want to make sure that people still want writers and that AI doesn't encroach on their work. And that's what all this has really centered on. And this is the first time they've gone on strike since 2007. That gives you an idea of just how big these issues have been for the writers in LA and across the country.
Karen, thank you very much indeed. Karen Reid, our global business editor there in Sydney. Right, let's have a look at some of the top stories we're looking at. Just a couple of them. Got a senior banker at Nomura reportedly being barred from leaving China. The Financial Times reporting that chair of investment banking for China, Charles Wang Zhonghe, is not in detention and is allowed to travel within China. The travel restrictions are linked to Wang's time at ICBC before joining Nomura in 2018. John Corzine will shutter their hedge fund he started after the collapse of MF Global. JDC JSC, Corzine's New York-based money management company, terminated its registration with the SEC as of last Friday. The company's loan investment vehicle had gross assets of about $510 million, including leverage at the end of last year. Well, looking here at Japanese video game studio Capcom, saying that high-quality games should become more playable on a wider range of smartphones in the next few years. The company hoping that it'll unlock opportunities to reach gamers who don't have consoles or indeed PCs. The chief operating officer there, Haruhiro Sajajimoto, told us more about the company's strategy.
In order to continue to grow, it is important to introduce new AAA type products every year. It is also important to release repeated titles over a long period of time while considering price sensitivity. We are planning of achieving stable growth through sales of these repeated titles.
Well, you've set a goal of selling 100 million copies of your games in a single year. Which platform do you think will drive that growth?
For many years, PC has been our main platform. We are currently selling in 230 countries and regions through this PC platform. While we will continue to use the PC as our main platform, I hope to achieve our 100 million copies goal with contribution from AAA type titles on smartphones.
Well, there's been some buzz around being able to play Resident Evil on the new iPhone 15 Pro. Now that you have this deal with Apple, I mean, tell us a bit more about that, but do you feel like it was a mistake not to get into mobile gaming sooner?
Capcom's high-quality games have finally become playable on smartphones with iPhone 15 Pro. Of course, we wanted to do it much earlier, but our technology were not able to meet that requirement. Now that we have the technology, we can continue introducing our games for the smartphones. We have built relationships with Apple by participating in Apple Arcade. Our title became available on the new iPhone 15 Pro as a result of this relationship. I look forward to continuing to work with Apple as a strategic partner and grow together.
We saw Microsoft acquiring Activision. There's been some whispers in the industry about some more deals. What is Capcom thinking when it comes to M&A? Is there anything in the works?
I think there have been many M&A talks in the game industry. There was once a time we were a target, but rather than acquiring an outside company, we prefer organic growth. It is important to train and develop human resources in-house in order to carry out growth strategies. I also believe we can utilize external partners, but we have no intention of acquiring companies.
What if Microsoft comes to you and says, we're interested in buying you out? Would you entertain that?
I would gracefully decline the offer because I believe it would be better if we were equal partners.
As a business leader, what do you think is the one thing Japan needs most in order to stay ahead in the world?
I believe the industry that will help Japan grow in the future is digital entertainment. We can respond to the global needs by utilizing our excellent human resources. Part of this is what we believe is game. Japanese games are very well received globally. These days, game IP is being made into movies. It's also been merchandised. In order for Japan to continue to grow, I believe that the game industry will have to lead the way. Capcom will work hard to increase corporate value and develop game talent. And we will do our best to support the growth of Japan.
All right, that's Capcom COO Haruhiro Sugimoto speaking to our very own Kurumi Mori. Okay, markets looking like this. Have a look at the commodity space first of all. We're seeing the property side of things as well in focus. But starting off with iron ore, 3.3% to the downside. This is the property market in China. Its weakness causing construction companies perhaps to hold back on the restocking of steel before the National Day holiday. Steel making, of course, is key to iron ore, and that material tumbled as much as 4.3% as well, and is taking the gloss off last week's gains that we saw. Looking at these property companies, and you can see 6.3% the decline, with developers seeing their share price really dive this Monday. Sentiment, of course, taking a hit from China Evergrande as it scrapped its key creditor meetings at the last minute. We got Ayan as well in focus as well. That developer resumed trading of its shares. They had been suspended for 18 months, since March of 2022. In fact, down 72% and increasing that drawdown now as well to nearly 74%. This is what Asian markets are looking like, and you can see that it's a mixed bag, even though we are seeing mild declines there as well.
This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question its industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
There we go, that's looking on by A. We've got futures about just below the gain line, really, is we are about 15 minutes away from the start of the cash session. And this is, of course, as we watch, or we focus in on India and take a look at the diplomatic spat between New Delhi and Ottawa, with the US Secretary of State Antony Blinken urging India to cooperate with a Canadian investigation into the killing of a Sikh leader in British Columbia. Now, Bloomberg's also learnt that Canada shared evidence of New Delhi's possible involvement with Indian officials, and that was before Prime Minister Justin Trudeau went public with the accusations, I should say. Government reporter Sudhi Ranjan Sen is in Delhi, and he joins us now. Sudhi, what have been the developments over the weekend?
Well, not much. I mean, the last that we heard, or the reaction that came from New Delhi, was to suspend the Canadian visas, and they had also issued a kind of advisory to its citizens, saying that be careful when you travel to Canada, and that seems to be where New Delhi is letting it rest right now. Meanwhile, my colleague from Canada reports, and that's what his reporting shows, that before even Prime Minister Trudeau met Indian Prime Minister Narendra Modi, there was some kind of exchange of information through the established channels of communication. That's the intelligence and the security services. But Government of India, we saw categorically denying that anything was shared officially. That is where it rests right now. It's a very, very fragile kind of a situation, with both kind of watching who blinks first.
And of course, it's not just them trying to get information from India as well, but also from the diaspora in Canada as well, which are playing a role in this whole process.
Yes, that is so to say, kind of the imponderable that is there. We clearly do not have a very good understanding of where that is going, and hopefully in the next couple of days, that's going to become even more clear. In between, what we get to understand from on the ground in India, that they're expecting, as you reported earlier, that there will be some kind of a response to the evidence that India had shared earlier with Canada on the involvement of Sikh extremist leaders who are functioning, operating, from Canada, the temples that they have. So that is the expectation from India. Let's see where, where that goes, whether there is any kind of a response from Canada.
Right, now, what is going on with, of course, the US, because they're courting India, and Canada, of course, is a key ally for them. Where does it leave Antony Blinken and his crew?
We've heard a very, very, so to say, a strong statement from Secretary of State Antony Blinken saying that, there can be no free passes, they expect India to cooperate, and that's about it. In India, we've seen Ambassador Garcetti on last Thursday, talking about, how any kind of comments is going to prejudice the investigations. He didn't quite clearly say, who it was meant for, those remarks. But India's interpretation is that those remarks were meant for Canada, which India believes kind of jumped the gun, didn't complete the investigations, and came out in public. So, from New Delhi, it seems to be that, there is a different kind of signals that they're getting, one from the ambassador and one from Washington.
Sudhi, always great to talk to you, Sudhi Ranjan there in New Delhi's government reporter there on the ground. Now we're going to look at what we have coming up as we keep the focus on India with JP Morgan's annual Investor Summit getting underway in Mumbai. We're going to talk exclusively to the bank's global deals head, Anu Iyengar, about their merger and acquisition outlook. That's on the way, and that is next. This is Bloomberg.
Always 50%.
Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
go. Looking at Mumbai again, and we are 9 minutes away from the cash session. Just looking at perhaps a bit of a drag to the downside, and certainly we're seeing a little bit of drag to the downside for the rupee as the dollar appreciates to above that 83 level once again. Part of the reason, of course, is the move up in crude prices again, because of course India's a massive crude importer, and it does affect, of course, the current account in a massive way. It does also mean that we've got these surging prices upending the sort of disinflation side of things among emerging markets, and putting developing nation assets such as those in India really seeing in a vulnerable position, especially when you can look at their bonds too. Let's get now some more details from our energy reporter, Stephen Stupczynski. Tell us about the ramifications of this higher oil price for India and indeed the rest of the emerging market space here, Steve.
Yeah, you know, India and other emerging markets seem to be a popular play when it came to investments because of, you know, the view that there was this disinflation. There was also this view that central banks will be reducing interest rates, but that might be upended with higher oil prices. You know, countries that are dependent on oil imports are exposed to spikes, and India has proven time and again that of all the emerging nations, especially in Asia, they are one of the most exposed to these higher prices. Now, it's not exactly clear how this will play out, right? This is an election year, so will the government allow these higher oil prices come down to the general consumers? Will that come down to folks, the gasoline prices? Will that hit inflation there? That's to be seen, and it's something that you have to remember when politics are involved and parties want to get elected. How will that impact those folks? But it could have an impact on your current accounts. It could have an impact on currencies. And you're also seeing the same thing happen in Pakistan, Philippines. You could also see that in South Africa as well. Now, it's not all the same story. While it will be hit, you know, countries that are major importers will be hit, especially in the emerging world. Exporters are going to see a benefit. So countries like Malaysia, Saudi Arabia, folks that export oil, they're going to see their current accounts rise. You know, they're going to see more benefit of the profits from this oil increase. So it's not, you know, across the board, you're not seeing the same sort of thing happening across all emerging nations. But if you do look at the major buyers of oil, they are going to be in a tighter spot and tougher spot now with prices rising.
Tell me, Steve, okay, you can have an impact on bonds, as you've alluded to here, but on top of that, you know, what is happening now? You know, we're seeing the elevation. You know, it's also some of the distillates, and the banning of some of them out of Russia is also having a material impact, is it not?
Yeah, I mean, look, we have to talk about Russia. We have to talk about the ban on diesel exports. That is a, you know, they did that last week. They're banning diesel exports, and they're doing that to help ensure their own domestic supply. It's unclear how long they're going to allow this export ban to continue. We're expecting perhaps for a few weeks, maybe 6 weeks at most, is what Morgan Stanley said. But, you know, the market for diesel was already tight. We're already in a situation where diesel refiners were in a difficult spot. So because of that, you know, you're going to see higher prices for diesel around the world, you know, not just in emerging markets, but also in countries that depend on it. And diesel is key for economies. Diesel is used for shipping goods. It's used for power generation in places for backup, and especially in poor parts of the world where they don't have enormous infrastructure. A lot of towns and areas depend on diesel. So the higher the price of diesel goes, that will hit consumers. That does risk higher inflation. And when you're a central bank looking at how you're going to unwind rates, how you're going to reduce interest rates, that's going to be something that they're going to look at. And it's going to be something that perhaps maybe you don't cut rates as quickly as planned or at all. So it is something that diesel is an important element to this story. And with Russia reducing and banning exports, it's going to have a higher inflationary impact on the markets around the world.
Steve, thank you very much indeed. Stephen Stupczynski, there, an energy reporter joining us from Singapore. Let's have a look now at just looking at the commodity space, looking elsewhere, and having a look at these. These are the bond yields that we have as we get JP Morgan, including the Indian bonds, well, Indian fixed income into its emerging market indices, and this is, of course, something that we're watching very closely, and we're going to be looking at this also in a bit more detail with regards to this annual Investor Summit by that bank in Mumbai, which is taking place this weekend. With us now is Anu Iyengar, the bank's Managing Director and Global Head of Mergers and Acquisitions. Thank you so much for joining us today. And, just want to get your view here, Anu, how this is going to change the game, if at all, for the Indian bond market. I know you're M&A, but generally speaking, what does it mean?
Look, I think the outlook for overall M&A market is I'm cautiously optimistic about, because the drivers in terms of what companies are looking for in the market is valuing continues to be profitable growth. And when you have global economic slowdown, it's important to find pockets of growth. And India offers exactly such a pocket for growth, which one of the highest GDP growth levels, as well as offering a potential solution to one of the key things that various companies are focused on. You talked about oil, but it's much broader than that. It's finding a diversification for supply chain, it's digitization, it's tech enablement, and being able to invest in those tech capabilities that is driving companies the world over. And when you look at that, India offers a very good target market to provide exactly those gaps that companies are trying to fix through M&A.
So those are the I can be a bit more specific. I think in the three themes that you're highlighting with regards to how they play out in the M&A and indeed the initial public offering market.
Yeah, so I think when you look at companies the world over, you're looking at almost every part of the world where organic growth that is available to you is pretty limited. However, the investors are giving a premium for profitable growth. So where do you go to find that, and how do you do that without using M&A becomes hard. And then when you look at how do you prioritize the different parts of growth, you're looking for supply chain diversification as well as tech enablement. And our own practice in India has been a mix of both strategic as well as financial sponsors. We talk about sponsors having about 2 trillion of dry powder globally, and there's about 150 billion that is now focused on India across infrastructure as well as other sectors, primarily tech and healthcare. And so as we look at the combination of the inflows into the Indian market, as well as the exits that financial sponsors have successfully been able to do, that bodes well for more money getting deployed in India, as well as more monetizations that you see coming out of India.
Absolutely. With interest rates globally on the rise and where they are right now, how does this lead to funding and financing of some of these deals? It must be surely getting more expensive, and as a result, what are you witnessing?
You're absolutely right, because the interest rate cost makes the same acquisition that you're going to do today more expensive. The availability of capital is there, but it is certainly more expensive. But on the other hand, valuations have also normalized in most parts of the market. And in this market, deal doing requires more nuance, more creativity, more negotiation, and more structuring. So a cookie cutter approach to deals becomes more challenging, and there is a lot more negotiated, structured deals that is happening bilaterally between two counterparties.
Yeah, I suppose due diligence is taking on a new kind of diligence, as it were, here as well. But is that fundamentally your advice about how M&A deals should be and deal making should be approached in India? And if it is, it's probably part of it. Is there something else people should be wary about when they do get involved with cross-border issues in India that they wouldn't have to deal with elsewhere?
Yeah, very good question, because I think I do advise people to, in this market, really take a look at how to find those capabilities, proactively approach the targets, build a relationship, and try to do negotiated deals. And obviously, if you're monetizing, look at both markets, M&A as well as equities, and navigate the exit path very carefully, because that also takes a lot of looking to find the perfect partner.
Absolutely. And, you know, within India, and getting away from cross-border, there are a lot of industry groups there which are ripe for consolidation. Which ones have you highlighted?
So I do agree that the mix will be both cross-border, with external companies, primarily US and Europe, looking into India, as well as a lot of domestic activity. And you've already seen a decent amount of consolidation in India, domestic consolidation between strategics using stock as consideration. When I look at sectors, some of the themes are the same as what you see globally, both tech and healthcare. Within tech, I'd say tech services as well as consumer tech in India. And the other two areas is infrastructure, where you have multiple infrastructure-only funds that are now getting set up. And the infrastructure spend in India is substantial, as well as energy transition, which is where I think you started in terms of the dependency on oil, and how do you see companies navigating that energy transition, both from an oil perspective as well as ESG considerations. And so I see these four sectors being some of the biggest drivers of M&A activity as we look forward to the next 2 to 3 years.
All right. We also have, of course, diplomatic tensions at the moment between Canada and India as well. Do you think that that is making people look at India again? Well, not again, but perhaps looking at India twice, if you know what I'm saying.
I think in any cross-border deals, there is always regulatory considerations and macroeconomic considerations. When you look at the inflows into India, it's primarily, like I said, from the US and Europe. And the more than about 50% of the M&A market is actually the financial sponsor community, which are largely US-based firms. And the amount of money that is getting deployed in India, as you said, with sufficient due diligence and negotiation, I don't see a change in any of that. In fact, it is hard to find a market like this, which has the growth characteristics, stability, as well as tech, healthcare, and infra solutions that are being provided by a multitude of companies. Because it's also an interesting mix that you see here of family-owned businesses, new founders starting businesses which are achieving unicorn status, as well as a pretty broad public market with more than 450 companies with a decent market cap valuation. It's hard to find an emerging market with all these characteristics.
So, Anuja, my last question is exactly on that point. You know, the IPO market has been rather mixed in the last year or two or thereabouts. You know, how do you see that working out in the next few months and years here as well? Because there have been some times when people have been too greedy, one could argue, and other times when they've just fallen flat on their face, some of these companies which have come to the market.
Yeah, I think valuing companies in both markets, in the public markets and the private market, and playing them against each other. In our world, we call them dual tracks, when you're thinking about exit, you look and compare and contrast both markets with each other. And you're right, for the last about 12 plus months, the IPO markets have been very quiet. We've seen green shoots this past few weeks, post-Labor Day in the United States, with ARM, Instacart, and many others coming to market. And as we move forward, we're very bullish on the propensity of companies to exit in both markets and being able to successfully run dual tracks, comparing and contrasting valuations in the private market as well as public markets.
Anu, thank you so much for joining us. Anu Ayengada there, JP Morgan's Managing Director and Global Head of Mergers and Acquisitions, joining us there from their summit in Mumbai. Now, just have a quick look at one other story we're looking at. We've got people holding 2,000 rupee banknotes have less than a week to deposit or exchange them with banks. That's before the Reserve Bank of India withdraws those bills. After the 30th of September, the notes won't be accepted for transactions and can only be exchanged with the central bank. About 7% of the notes were still in circulation at the start of September. Quick look at markets. We had the trading day begin 5 minutes ago there in Mumbai. The cash market just fairly anemic, just down a fraction right now, as we're looking really to see whether there's any news for the bulls or the bears to really be putting their hats on. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I found myself in a spot where I was constantly getting new challenges. A lot of, I think, the best mentorship I had at Bridgewater was because people often saw in me the potential to do things I didn't even see myself yet.
From New York City,
from London and Sydney,
from Washington,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
You're back with Bloomberg Markets and having a look at some of the big stories we're following for you. We've got the European Union's chief trade negotiator. That's him there. He's saying the bloc is trying to strike a new balance in relations that they have with China, saying that their trade at the moment is very, quote, very imbalanced. This is Valdis Dombrovskis saying that the EU wants to reduce its dependency on China while maintaining access to its markets. Dombrovskis is on a 4-day visit to China and is holding talks with officials after the European Commission announced an anti-subsidy investigation into Chinese EVs.
Broadening access to China's market for foreign companies and maintaining a stable business environment is necessary to ensure fair and mutually beneficial trade relationships. It is also necessary to maintain our mutual trust as partners working together to address a number of global challenges.
The PLA, the People's Liberation Army, urging Chinese military personnel to be careful about who they associate with. The state-run PLA Daily says cadres should purify their social circle, warning that some leaders have been removed after socializing with the wrong people. The commentary follows the removal of Qin Gang as the foreign minister in late July, as well as the defense minister Li Shangfu's disappearance from public view. German Finance Minister Christian Lindner says that the country may need to rethink its liberal migration policies due to the rising number of undocumented arrivals. Political asylum is guaranteed in the German constitution, so a tightening of restrictions will require a 2/3 majority in parliament. More than 204,000 people had requested asylum in Germany through August. That's a 77% increase from last year. Okay, let's get to the market action and have a look at, first of all, some of the moves that we've been witnessing with regards to some of the commodities out there. Iron ore in Singapore and indeed in Dalian, 117 bucks, down 3.3% there for this, of course, which is the basis of why we have steel here. It's only down to China's persistently weak property market, and also at the same time construction companies are not restocking as they do, restocking steel before the National Day holiday period. And now iron ore is tumbling, what, at the moment, 3.3%, and that's taking off some of the sheen that we had from last week's 8.5% gain. Here we go. This is the Hang Seng 5 minutes before we go for the lunch break. And again, it's property which is at the moment bedeviling this particular index. And we have right now Evergrande at the moment just really seeing its latest attempts at restructuring being abandoned. It's scrapped its key creditor meetings at the last minute and saying that it must restructure those plans to restructure. We've got this is the MSCI Asia Pacific Index, and looking at some of the stocks which are, or industry groups which are on the way down, and certainly materials and financials are amongst the biggest losers dragging this particular index out, whereas healthcare 1.3% up, and IT as well holding things to the upside. There, at least, it is down overall. Daybreak Middle East and Africa.
One of my high school physics projects was to build a small rocket. Mine went really high, but instead of being glad, I remember thinking, how could I have made it better? And the desire to satisfy that curiosity is part of the reason why I chose to be an engineer.
What are some of the measures the government are working on in terms of addressing the artisanal challenges there?
Oh, a host of them, but fundamentally hinge on two policy pillars. One is reformation, which is reforming the sector, licensing regime, getting them equipment for the extraction of the gold from the ore without the use of mercury. As you know, we are parties to the Minamata Convention, and therefore we respect the dictates of the Minamata Convention. And then the enforcement regime, deploying law enforcement to make sure that people are arrested and so on and so on. So we're making that effort. But my point is that, my fundamental point is exploiting these mineral resources in a sustainable manner are not mutually exclusive.
Yep.
I think that they can peaceably coexist. You can exploit the resources, and several countries have done so. I don't want to mention, give examples, but I know of countries which have gone about their mining sector and their mining industry in a manner which is also protected the integrity of the environment and the climate. We can do all of that. My friend Josephine mentioned that they will use solar to mine and use gas and all of that. These are all very ambitious technological interventions we can rely on, and Ghana is doing just that.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Daybreak Middle East and Africa. Looking at our top stories, we've got Asian stocks on the way down while U.S. Treasuries creep lower. As traders hear more Federal Reserve officials take that higher for longer stance on interest rates. The dollar on its second longest weekly rally, would you believe it, since 1967. The European Union's chief trade negotiator says the bloc's trade relations with China are, quote, very imbalanced amid the EU's investigation into Chinese electric vehicle subsidies. Striking Hollywood screenwriters reaching a tentative new labor agreement with studios. It may settle one of the two walkouts that have really shut down film and TV production since May. And we've got oil prices resuming their rallies. Hedge funds bet on tightening supplies ahead. Banks are increasingly making predictions that Brent crude will hit $100 a barrel. It's just gone 8 a.m. across the Emirates, 7 a.m. in Saudi Arabia and Qatar, noon here in Hong Kong. I'm Rashad Salamat. Having a look at the market action. Hong Kong is going off for its lunch. We're looking at futures now. S&P suggesting perhaps a move to the upside. Not quite as much as that is at the moment reflecting, given fair value being taken into consideration. Looking also now at the picture for European futures as well. Down our story there. We've got the MSCI Asia Pacific Index down by about 0.25%. It is all about property companies, which are really at the moment adding a lot of drag to this particular industry, or should I say in terms of the benchmark at least. And it is the dollar again. What are we seeing here with regards to the greenback 10-week long winning streak? Now look at just some of the prices you get now for the dollar. We've got the yen on 148.39. We've got the euro 106, and sterling perhaps taking the biggest hit out of the G10 currencies, $1.22 for £1. And let's not forget that we've got this as hedge funds do switch to being a net long overall with regards to the world's reserve currency. Just quickly looking at the oil price as well. Brent crude 0.2% to the upside, adding to the Friday gains that we did see. And oil prices seemingly at the moment a one-way bet. The reason why, well, we had quite a lot of resilience with whatever happened on the markets last week, especially equity-wise. That resilience does speak loudly to perhaps crude's positive underlying fundamentals, i.e. the supply and demand dynamic, certainly at the moment being concentrated on tight supplies more than anything else. And of course not helping here a ban on Russian diesel and gasoline exports, which again highlights the supply risks here as well. But it is about property. Just mentioned it with the overall regional benchmark being dragged down by real estate firms. Avril Hong is in our Singapore studio. Now, Avril, how are concerns about this industry at the moment playing out overall in markets? Because every day we get news. Sometimes it's good. Maybe it shows there's a little bit of light at the end of the tunnel, but generally the tunnel keeps getting longer.
Yeah, it keeps getting longer and the light keeps dimming as far as this sector in China is concerned. Those concerns about the real estate sector, given how policy support has been coming through in bits and pieces, but it really is illustrating here just how much trouble the sector is in, and that seems to be what's playing out on the markets. Last week it was more about that higher for longer narrative. This week it's about the Chinese property sector, at least this Monday. And let's take a look at the center of it all, which is Evergrande, because it has since said that it is reassessing its restructuring proposal. It's also scrapped some of these key creditor meetings, so it's raising concerns about the company's restructuring plans. We also saw how a gauge of Chinese property developers slumped by the most since December last year, so really highlighting the concerns in the real estate sector, and indeed that is weighing on the minds of investors today, Rish.
Thanks for that, Avril. And we can get now the thoughts of Kevin Kingsbury here, who's our China credit editor, and he's with me here in the studio. Kevin, from a credit perspective, not looking good, to put it mildly.
No, I mean, this was already one of China's most complex debt restructurings, and it's obviously getting more complex now. Votes for creditor meetings this week have been scrapped. The company says that because of an onshore investigation, it's not able to issue bonds offshore. And so there's just more troubles here. And then with the shares of Evergrande and its 2 units slumping even further today, that was some of the compensation that the offshore bondholders were looking to get. And with the equity values continuing to fall, And with the dollar bonds not being able to be issued, its question is to when can the company actually provide recovery to the creditors?
And they've got to get this all done because they've got a court, I think, here in Hong Kong, which has a winding up petition in deadline.
Correct. The next hearing for that is October 30th. This is a case that's been going on for more than a year now, filed by a millennial investor who says he's owed upwards of 110 or so million US dollars from an investment made into an onshore car platform of Evergrande's. And so depending upon how this goes, the judge in the case has issued winding up hearings on 3 other developers within the past year or so. So if she's not happy with the debt restructuring progress of Evergrande, we could actually see another liquidation order issued for Evergrande.
Well, you'll be very busy in the next few days and weeks, as you have been in the last year or two anyway. Kevin Kingsbury there, China Credit Editor. Moving now to geopolitics and have a look at the European Union's chief trade negotiator. It says that the bloc is seeking a new strategy toward China, calling the current relationship, quote, very imbalanced. This is Valdis Dombrovskis adding that it's important to maintain mutual trust as trading partners work together.
Broadening access to China's market for foreign companies and maintaining a stable business environment is necessary to ensure fair and mutually beneficial trade relationships. It is also necessary to maintain our mutual trust as partners working together to address a number of global challenges.
All right, let's get the thoughts of Rebecca Chung-Wilkins, our Asia government and politics correspondent. Rebecca, what are you making of this, first of all? I mean, this is an investigation, a probe, but the reaction on the Chinese side has been quite vociferous, or vehement, if you like.
Yes, absolutely. I mean, I think this is quite a stark assessment that we've seen from Dombrovskis, and particularly in his comments today, talking about the EU and China relationship at this crossroads, either to go forward with something more mutually beneficial or to start drifting apart. Now, we have seen the EU generally being more moderate than the US when it comes to treating China as a strategic competitor. But with the background being this probe into China's support domestically for its EV industry, these concerns that China is flooding the EU market with cheap Chinese cars, essentially changing the playing field for firms and leading to this imbalance that he talks to. We do see the EU, particularly significant that we have such a senior official from Brussels being quite outspoken about the unfairness in those dynamics now.
And they've got to navigate what the US wants as well, because there's a lot of pressure on Brussels coming from Washington.
Yeah, it's an interesting element, you know, between when we think about how the EU has sort of figured, it has often been seen as trying to strike a middle path between China and the US. Interesting now to note that while we see more of these conversations between the US and China going on, this working group, for example, they seem to be striking a little bit more of a balance. And now it is the EU that we are seeing that is somewhat more vociferous, somewhat more explicit in its criticisms. It's partly, though, a legacy of the 2 different approaches that the US and the EU have taken towards these issues over what is perceived to be this unfair support that China lends to certain industries. The US, for example, already has very high tariffs on imported cars from China, whereas the EU hasn't offered those same kinds of restrictions. It's a much more open market compared to the US. So part of this is also the catch-up that some EU's officials now see as necessary when they come to addressing these sort of issues of competitiveness between the EU and China. Worth also saying the EU says that to some extent, Dombrovskis has pointed out, this is country agnostic. This is really about creating a fair playing field among all countries. So that's another sort of line of argument that we're seeing the EU taking.
Rebecca, thank you very much indeed. Rebecca Chung-Wilkins, our Asia government and a politics correspondent, and it does come against this backdrop as we get the US and China reviewing, well, the US is reviewing some tariffs on more than $300 billion worth of Chinese goods, and they're trying to review that by year's end. Okay, let's take a look at striking Hollywood screenwriters. They may not be on strike for very much longer as they reach a tentative new labor agreement with studios including Walt Disney and Netflix. Global business editor Karen Leach joins us, and okay, Karen, this is early days yet in this resolution, and as I just said, it's tentative, so what do we actually know here?
You know, this is a huge deal for Hollywood. It's really news that they've been waiting for since the Writers Guild of America went on strike in May. And for weeks, we've seen these images of writers in front of Hollywood studios waving signs. We've also seen the Screen Actors Guild go on strike, and it's really brought Hollywood to a halt. And what they've been waiting for is a deal between the two sides, the WGA taking the first step of those bodies, and it said it has reached a tentative agreement with the studios. Now, this isn't a done deal. This is a 3-year tentative agreement, but the Guild's saying that it will provide protections and gains for its thousands of members. And if it is ratified by the Guild, it will bring an end to the first Hollywood writers' strike since 2007. And you know, Rish, it's really hard to exaggerate how much this strike has meant to the city of Los Angeles, to the industry. In addition to Hollywood not being able to put its usual number of new shows and movies out, the city of LA itself really depends on Hollywood. All kinds of industries, from makeup artists to restaurants, and they've taken a hit into the billions. So this is going to reverberate across Southern California. People will really be welcoming this and hoping to see it ratified as quickly as possible.
Karen, I mean, it goes beyond just pay, doesn't it, here? You know, it's also about the industry's future, and who could blame them when they, you know, many people say that they don't need these guys because they could just use AI in the future.
Yeah, I mean, this is a really interesting time for the industry. It's no coincidence that this is when you're seeing this level of strike from both actors and writers. And what the writers have been concerned about is things like residuals that have completely changed when these streaming services like Netflix came in and really changed the way Hollywood operates and how people like writers are paid. At the same time that the studios, they think, are profiting while they aren't. And at the same time, you have the rise of AI, and writers are concerned that AI could take the jobs that would go to writers. They want to make sure that there are protections in place to ensure not just that they're paid, but that their jobs continue on.
Now, I want to move to a completely different industry and have a look at what's going on with the United Auto Workers, and you know, these strikes taking place with General Motors and Stellantis facing walkouts at what I think the last time I looked was about 38, 39 more facilities. You know, this, by the way, is what the union president Sean Fain said in a Facebook live stream briefing which took place as we went into the weekend.
We can and will go all out if our national leadership decides the companies aren't willing to move. Stellantis and GM in particular are going to need some serious pushing. All of the parts distribution facilities at General Motors and Stellantis are being called to stand up and strike. We will be striking 38 locations across 20 states, across all 9 regions of the UAW.
So, Karen, since you made those remarks, has there been any movement between the two sides?
You know, they're going to expand the actions against GM and Stellantis, but they are sparing Ford, having said that they received some concessions from that side. And what we've seen over the weekend is people anticipating the visit of President Biden to Michigan on Tuesday, and it will be followed a day later by a visit from Donald Trump. And of course, we're going into the 2024 election cycle. Biden really wants the support of the UAW because this is all happening in key labor markets in the Midwest. It's also happening in battleground states that he's going to need if he wants to win in 2024. And his transportation secretary, Pete Buttigieg, saying over the weekend that they want both sides to strike a win-win. At the same time, the administration has been pro-labor, but it has stopped from completely throwing itself behind the 40% pay increase request by the UAW. So a lot of this is playing out really at a crucial time for America, and against this background of presidential politics, it's going to keep being probably the world's most watched strike for some time.
Indeed, and we're going to watch this space. Thanks a lot for that, Karen Lee there, our global business editor out of Sydney. We're going to now look ahead to what is likely to be the biggest thing on many market participants' minds, and it is all about interest rates, with the Fed official expecting one more hike for the year. The central bank grappling with inflation still. Arkham Capital shares their investment strategy later this hour, but up next, hear why Neovision Wealth Management is staying away from US equities, particularly overhyped tech stocks. This is Bloomberg.
For growing your personal wealth across ASEAN and Greater China, we have what it takes. With our wealth solutions and digital innovations, we empower your progress as one group.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because he's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You got me beat.
Very good game. Well played.
Thank you, sir.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
There's a lot of information we need to collect. We will not be satisfied that we are where we need to be until we see inflation confidently. We're confident that it's on a path back to price stability. Because the American public, as much as they're getting relief, you all didn't ask for us to just get a little relief and call it a day. You really asked us to do our job.
San Francisco Fed President Mary Daly there. Now, there seems to be a growing disconnect between policymakers saying that inflation is abating and consumers still feeling the pain of increasing prices of various essentials. Hearing more rhetoric from Fed officials taking this so-called higher for longer stance. Treasury is certainly in play as we await more comments from Federal Reserve officials, and we also get that core inflation data out of the US as well. The PCE number is something that the Fed closely watches. Ryan Lemont is the CEO and co-founder at Neo Vision Wealth Management, and all of this as we get equity markets which didn't do well last week but have been doing fantastically and going at a great clip. So Ryan, you know, what is your interpretation of the mood music coming out of the Federal Reserve?
Hello, Rish. Well, the Federal Reserve clearly has stated and has been stating it's higher for longer. And I think Jackson Hole was very important, where Jerome Powell has said keeping at it, which were Volcker's words. I think the Fed can feel that energy prices going up will affect inflation. They haven't fed into gas prices yet, but they will. So inflationary pressure is there. On the flip side, if you look at the basically Treasury policy, it's expansionary. Since $33 trillion of debt were crossed, the U.S. has added $830 million per hour of debt. This is inflationary, and it's acting against the Fed.
Well, so what is your takeaway from this? Because you're not looking at the market as others are, because I mean, if you look at how the equity markets in the US have behaved, particularly the S&P and NASDAQ, you know, you've got the Magnificent Seven. You know, the other parts of this market are not doing very well, and they are showing some cracks here. Do you think that they are really reflecting fundamentals, or do you think they've just been left behind?
Precisely, Rish, and that's why we've been away from the U.S. stock markets since spring of 2023. We do not invest into a market that we cannot explain. The S&P 493 is flat over the year, which is what we expected. Small caps, Russell 2000 tech, divided by the S&P 500 is at the lowest ever recorded. So we do believe that the rest of the stock market is reflecting correctly fundamentals. Interest rates above 5%, deteriorating U.S. economy much more than the Fantastic Seven, absolutely, and that's why we're away from it.
So Ryan, then where have you been allocating?
So we've been in Japan, in Brazil, Saudi Arabia, UAE, some private equity deals, and cash. Cash is paying us 6% at the moment. So 40% cash is paying 6%, which is beautiful to minimize the portfolio risk. We went out of Japan back in June, earlier this summer, because we weren't sure where the Bank of Japan was going to go, and now we're getting back in because we think that the Japanese yen will be capped at 150, and we think now it's going to pick up again. We are looking very closely at China, looking for an entry point, though it's not very sure yet. We think it has bottomed, and there could be an opportunity to get back in. Brazil, Saudi Arabia, UAE, the performance of the portfolio has beaten the Fantastic Seven.
Well, it would also, given the price of oil going up. So, you know, well, how do you play that? Because how much of it is already priced into these company stock prices?
Well, absolutely. We do believe that oil is heading to $100. That's something I discussed with your colleague Manas earlier this summer. I said that the second half of the year, oil prices are going to go up. Japanese stocks, if the yen is capped at 150, so if there's an intervention, and I think Secretary Yellen has given the green light for that a few days ago, saying they expect the Bank of Japan to intervene, I think in the dividend-paying Japanese stocks, there is value there.
Well, and, you know, we're talking about the oil price here as well. What we've got also is a lot of industrial action, aside from, of course, perhaps this resolution of the Hollywood writers' strike. But, you know, in other parts of the economy, particularly UAW and other unions, have become more and more vociferous, seeing that their disposable income has been eroded because of inflation. Does this now create a new form of a demand pull inflation at the same time as we are having cost push from the higher price of oil?
100%, Trish. So there's a big shortage on the supply side. There isn't enough being invested in the infrastructure of oil, whether upstream or downstream, knowing that 75% of capex into oil is replacement capex, just replacement capex. So yes, oil prices are going up, and it will feed into inflation. In the history of inflation, we have never had inflation that high in just one cycle. We just finished the first cycle of inflation. We do expect a second and potentially a third cycle of inflation. And this time, as you rightly mentioned, demand pull and energy driven. Absolutely.
Final question. You've got to be brave to invest in China. That's the general consensus. Are you being brave, and will you be brave?
Yes, we will be brave in a very small allocation, being very, very cautious in how we do it. The real estate market in China is still unfolding. We've seen an announcement by an ex-Chinese official saying even if 1.4 billion Chinese go and rent or buy houses, there will still be oversupply. This is concerning. But we do think many of the Chinese stocks have gone to values that are absolutely no-brainer to buy, and we think they've bottomed out. It's still a very small allocation that we will build over time as we see data trickle in from China.
Ryan, thank you so much for joining us. Ryan Lamont, CEO and co-founder at Neovision Wealth Management. We've got a lot more in the way, including a full market check.
Hi, my name is Jeffrey, and I'm the founder.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, you know, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime is not increased.
Are you involved any longer in New York City matters, or you're advising?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
To start with your question, a year ago, under our statute, we were asked to begin a process to evaluate not the necessity of the tariffs, but the effectiveness of the tariffs. It's important to be really specific about the statutory requirements because we've got to follow the law. And so we began that just about a year ago. We are engaging in a very robust interagency process. We requested comments from the public across our economy. We had an open public comment period that closed earlier this year that generated about 1,500 comments that we are going through very carefully.
The US Trade Representative Catherine Tai speaking at the Atlantic Council Forum. Tai saying that her agency is aiming to finish its review of tariffs on more than $300 billion in Chinese goods by year's end, adding that Washington is being thoughtful about how to rebalance their trade relationship with Beijing. Talking of trade, we're looking at Australia as it continues to pursue a case at the World Trade Organization, the WTO, against China's tariffs on wine imports. It's rejecting a proposal to tie the issue to a separate dispute on steel products. Since removing levies on Australian barley last month, China has signalled a willingness to discuss other issues, including wine, and indeed last week, Beijing said it wanted a package solution to address Australia's complaint. These are what markets look like. Equity futures at the moment are under a bit of pressure. We're seeing the two-year yield on with a handle of 5.1%. There you go. And also, equity futures for the US pointing to the upside.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. In a multi-trillion